The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition, a special edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Fed out just with their announcement. No big whoops out here. And, of course, we're at 20.99 off 12, 13 points on the S&P cash. Amazingly, for a Fed day, we have more volume than typical at this time. 2.5 billion shares have already gone through the hoppers at the New York Stock Exchange consolidated tape. And we look and see what else is going on there. More assaults on the dollar by the Treasury Department out there with its fire hose. 747s and helicopters full of cash. $97.34. When we look at the TLT, it's up $1. They're pulling all the levers, but it's not having any real effect yet. And this is the scary part if you're in the Fed, and that is, what do you do when all the tricks you pulled before don't work? Well, we can't say that definitely yet. The market has a tendency to bounce around for a while, but they came out with a fairly hawkish statement today. And for people that have watched the Fed in the past, it is normally thought that the Fed tries to get rid of all the excesses in the first year of a new president. They are seeing that now, and there's probably more than a few skeletons in the closet, and not just from Halloween, in the economy. So they'll try to wring out the excesses in the first year of a new economy. That's kind of why I said I don't really think it matters all that much who gets elected for the stock market. I have my own opinion, of course. But, yesterday I said we needed to play that Billy, Don't Be a Hero. I didn't see any way that we got away without testing 2090, 2087 on the S&P cash. I think we're going to do that here shortly. And again, you got to look at the volumes. But, we came in with like 4.5 billion shares yesterday when, most of the time we're getting 3.5, on a good day, 3.8. 4.5 billion shares was a pretty good indication that you had a high volume low, and high volume lows are not lows until they're tested with a lighter volume. And I just couldn't think there was any reason to go long. I didn't see any signals. I still don't see any signals. We'll see what goes on. Maybe this gets a lot worse even than I thought, but we'll know. 2092, 2087, somewhere in there should be the first real attempt by bulls to start buying this market. And we'll see just how much ammo, how much powder they have dry. Anyway, 2.5 billion shares.
The following takes place between 2 p.m. and 3 p.m.
Almost every day. So as we look at this, is there anything else going on here? Of course, Facebook after the bell tonight, last time I looked, it was a little lower. As I said, I'm not expecting a great deal out of Facebook. It's off $3 here. Kind of acting like many of the stocks which sold off right into earnings, kind of doing an Amazon. I don't have any deep insight into Facebook. I don't use it. There's a great cartoon that I sent the link to somebody, and it's kind of like a cartoon that goes through, imagine if there's no Facebook. It's easy if you try. I never got into it. I spend so much time reading stuff already. I don't know if I'd have the kind of time to go out there and have 4,000 friends all sending me cat photos, dog pics, and their kids graduating from the latest quarter of grade school. And I guess you got to be committed to it. Some people are. I'm not. I need to actually get some calories, not empty calories, but decent calories out of the time I spend in front of the computer. And I just never thought I would get that from Facebook. Anyway, off $3 on that. And of course, as always, we like to start off the show with a little bit of history. Come on.
That it's all just a little bit of history.
Why did it do that?
That it's all just a little bit of history repeating.
We're going to make Shirley Bassey and the Propellerheads actually belt that out. What a great song. Anyway, what do we got going on here today in history? On this day in 1947, the Hughes flying boat, the largest aircraft ever built, is piloted by designer Howard Hughes on its first day and only flight. Built with laminated birch and spruce, the massive wooden aircraft had a wingspan longer than a football field and was designed to carry more than 700 men to battle. In 1996, I'm going to say 1996, I was busy pushing our wares on the Queen Mary II, which had been taken over by a film crew to produce the Titanic. And we had 40 customers working on that, or actually 40 employees of a single customer working on it. They'd taken over the banquet facilities of the Queen Mary II and had been working in it. I ended up staying there for about 2 weeks and left. They were there for, 9 months or something. But we went out, got them all started. I spent there 2 weeks, worked with some of my programmers to add new features that they thought they may need. But right next to it at that time was the Spruce Goose. The owner of the company, actually the guy that threw all the cash in 1990 to start the thing, or 1980. The cash guy, I was the sweat equity partner. The other guys, I think there was some other couple people that threw some cash in, but the big guy that had all the cash he threw it in. And anyway, he was out there visiting us, came over there, wanted to see the Spruce Goose. He had a lot of cash. Even today, I wouldn't. At any time in my life, I wouldn't throw cash around like he did, but he would. He'd spend $500 on a dinner, and I didn't mind going to dinner with him. But we went and saw the Spruce Goose, which at that time was right next to it. He flipped the guy that was watching the whole kit and caboodle $100 for each of us, and we got our own personal tour of the Spruce Goose. I thought that was one of the highlights of my life. Got to go up in the ladders in the tail of it. It's now moved up somewhere, in Oregon or Washington somewhere now, where not many people can look at it. But what a deal. And, of course, it only flew once, and that was to prove that it would fly. And, of course, a lot of different stuff, a lot of different specials on it. But it's one of those things that gets built that is kind of like the pyramids out there. Hopefully it'll be around for a long time. But a big story behind it. Howard Hughes flew it. I don't know what else you can say about it. Well worth seeing something that is just built to literally build it. But I don't know. When we get back, we're going to start looking and seeing what's moving in this market. Right now, we're off 12 points in the S&P cash. Volume is now 2.6 billion shares on the New York Consolidated Tape. I'm looking for that 2092 low test. Maybe we get it today, maybe tomorrow, maybe before Monday. That is probably going to tell us what happens. Can we hold 2092? Can we hold 2087?
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yeah, the Walter Murphy version of that classic. We played at the top of the break. I wanted to play old Fortuna, but most people, I think that would probably have been a little bit tough right during the FOMC announcement, but it's still interesting. Of course, yesterday I said, don't be a hero. Don't be a fool. And why is that? And that is high volume lows are not lows until they've been retested. And yesterday we had a high volume low, 4.5 billion shares on the New York Consolidated Tape. The question that I have from John and Boynton Beach. I can't ever say that town correctly. Anyway, in Boynton Beach, Florida, wants to know what I think of the volume. Would it come in higher? I think it's going to at least come in close. So there's not going to be a good indication that we have a low out here on lighter volume. What you would need to really, or at least what I would need to start buying something, was a bounce on decent volume, and then a pullback with, again, lighter volume to whatever the low of the day is going to be out here. Today it's 2094, so we're close on maybe getting a small bounce out of this thing. I just don't see the next big wave of buying coming out here until we get 2094, which is today's low, tested on a lighter volume. I would also like to see everybody on CNBC actually turn bearish. All they do is talk about buying things. I want to be on the opposite side of what when everybody can't even talk or even think about being short. But can we bounce out of here? Yeah. I just don't see a great deal. And, of course, a high volume low today has pretty much developed. So we need to test this 2094 at least, if not the 2092, 97 area. And, we're into Wednesday. If this market doesn't get any legs underneath it, we'll get into Friday. Haven't seen a lot. This is the second day of fun buying. Really haven't seen anything other than a ton of cash kind of go sideways or down. It hadn't been an issue. And, maybe they come in before the end of the day and I change my view, but I'm thinking that we're probably at about a 20% chance of that before the end of the day. As always, if the facts change, I'll be able to change my opinion when the facts do change. But right now, I don't see anything else out here that says, 1, this is a low, 2, it's a buyable low, or 3, that we've got even kind of a decent bounce that I would want to buy. But of course, I'm not buying for the next 5 or 10 minutes on the next 30-minute chart. I look at the dailies pretty much exclusively. I'm a swing trader. I like to look and see things setting up for 7 to 21 days, mostly because my research says that is the way to maximize your profit. 2,100 on the S&P cash, 2.65 billion shares, so volume continues to roll in. As we said, Facebook was down. In fact, let's update this here just to take a quick look at it. Come on, Mr. Facebook. Come on. I don't know why. There we go. You're down. Volume is higher than yesterday's. Going to be more than the 28s. You're back in here to pretty much support. This is 126. Is our earnings going to be horrible? The answer is no. Again, the issue is, do we have people lining up to buy this thing? The answer is no. We're going to see a PE of this thing, at least from what NASDAQ is reporting. Forward PE right now is 39, 31 if they get the growth that they want. That's in 2017. So this is an expensive stock to buy, at least even in forward PE at 31. I would much rather see and buy this thing on a decent pullback. And would I be short it? The answer is no. Now, other things going on out here. We got a lot of stocks after the bell besides Facebook. Maybe we'll get an opportunity to look at those. In the meantime, want to look at how some of the other ones have been trading. Of course, Amazon whiffed on earnings, and I'd been thinking this thing was at least on its first move going to hit 740. I think we're probably fairly close to seeing that in the next day or two. We got to 763.55 today. But that 740 area is kind of where it was all over after hours during the after the earnings cycle. So I suspect that that's kind of where the weak side of the chart is on Amazon, around that 740 area. That's probably where the first bounce would come in. Maybe it comes in at the same point where we find a low in the market out in a day or two. What else do we have going on? Looking at Facebook, see how some of the other FANG stocks are looking today out here. Microsoft pulling back a little. It's doing it on a lighter volume today, getting into this gap up of the 21st that had almost 80 million shares with 13.7 million shares. Continues to be probably one of the stronger stocks. Had somebody ask me what I thought about IBM out here, I would still like to see this thing at least at 147 to 141 before I could buy it again. We did buy it off that Grexit low and had a nice run on it, but it's looked like it's going a little sideways. 2103 on the S&P cash. So what else do we have? IBM, Facebook, Amazon, Google. Google's coming back into its gap. Volume not picked up today. This would suggest that you want to be looking at just under 780. Let's call it to 775, 778, where we have a double gap. So many of these have come back into that area and bounced. That's, again, where that would be the first time that we'd looked at it. Volume is kind of low. You did have a day where it came down on some volume, which started this off the top, that 739 high from October 28th. So that gets us back in there. So could we have a low? Yeah, my guess is it's either going to be Monday or Tuesday out here where we see these things probably see the first kind of little bit of sand under the keel if they're sinking. Let's go back and look at some other ones. Got a quest to look at the TLT out here. Again, just on this one, I still suspect this is getting ready to gap down again and away fairly soon over the next few days. It's building up energy to go back through that. There's a gap at 120, just under 128, 127. And again, another one down at 125, so we'll see it. But I suspect the way this thing's been acting, the energy coming off the top, that 127 on the TLT is probably the first level that finds some more than 1 or 2 day bounces out here. Today it is higher. Volume is lighter, 6.22 million shares compared to 12 million shares, 12.6 million shares yesterday, making that 129.88 low. Again, high volume, those are not lows until they get tested on lighter volume. We'll be back. Last. Oh, got a phone call. We'll take it as soon as we get back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We got 2 callers on the line. I'm going to get to you both first. John in Philly. How you doing today, John?
Hey, David. Good afternoon to you. David, you've been talking a bunch about Amazon, then Apple, and Microsoft, amongst others. And I'm wondering about NASDAQ 100, NDX. And In doing my analysis, setting up speculations, looking at the future, I always start big picture, go small. And as I look at the monthly and weekly charts on NDX 100, going all the way back to that 2009 bottom down near 1100, I'm persuaded to think the rally phase is quite mature, and that the high just made on October 24th, 49.19 or thereabouts, stands a chance of being a high, a turning point top that could conceivably lead to a decline that goes back to the February 10th lows down near 3,900. I'm wondering if you can share with us what you see in your studies that would lead you to say that is supported or that just ain't possible.
Anything, of course, is always possible. I'm looking and think that just because we spent so much time at the highs, that the probability of mass distribution is big, and that many people were selling out in that euphoric state. There is more than enough evidence to suggest that, like I said, just the overall economy, I think, is growing at about 1%. Notwithstanding the government reports that say 3%. I think those will be corrected and amended fairly quickly after the election. So I just think that we're going to have a little higher interest rates and we're going to have some decent pullbacks. Now, on a fundamental basis, I've seen many papers and people that have gone back and said that the difference between what we have now, zero interest rates, and interest rates at a decent, reputable, historical level for the economy right now, would say that 30% of the earnings are because of that zero interest rate. So as we start heading back that way, there's a fairly decent haircut to be had in this market, especially in the tech stocks that have these massive PEs. In fact, we're close to all-time PEs, price-earnings ratios, over the last 3 or 4 months. So it's in a very expensive market. The Fed needs to tighten and get some of the wring out some of the excesses in the market that have caused by the unintended consequences of letting this go way too far. We've already seen the housing market start to tank. One of the other things I've been looking at out here is a stock called DVI. I don't know. Have you heard me talk about it?
I have, David, yes.
Okay. For those people that don't know, it is a REIT. They sell or they rent to, I don't know why everything is so slow today. Come on. Is it something else? DVI? DIV? DWI? Yeah, it's driving me nuts now. I got the symbol wrong. Anyway, I'll figure it out during the break. Anyway, this company, is it, what is it? Digital Realty Trust. DRI, maybe?
I can't help you. I wish I could.
DRI. Let's try that. Garden Restaurants. No, I'll think about it here. Digital Realty Trust. DLR. Okay. I've lost my mind again. DLR. DLR is a outfit that is a REIT that rents to all the San Francisco startups. And when I saw this thing, I actually tried to short the thing, got it wrong, got stopped out, thank God. Went to 12, and then it just rolled over with no real good sign out here. But I have a feeling that's the cataclysmic high in this, when literally everybody was throwing cash at anybody in Silicon Valley, and everybody was looking for some kind of place for a startup. But if there's a ground zero for a nuclear weapon going off in tech, it is the property values in and around San Francisco. They've been literally ludicrous, make everything in the past look small, even the land values of Tokyo back in 1992, before that all blew up. So what can you say about it? There's more than enough ammo out here that says that at least the land values are probably and rental values in Silicon Valley have hit a high. That probably starts showing that other money is going to be hard to find in Silicon Valley also. So, if we're looking at the NASDAQ as, for the most part, everything around San Francisco, I think this would be yet another good signal that we've got excessive energy, that we may have made a fairly medium-term length high in the NASDAQ, and we're going to start looking for value stocks again, not these things in the 30 and 40, and like, what was it, CRM had earnings when they came out, and this thing gapped down back. It's back up to that gap now, but it gapped down on the 1st of September. But I think the PE on that thing was like 50, or it was horribly excessive, right? May have been 70. I'd have to go look it back up when it cratered on September 1st. But to me, these things were getting way out, as they say, in front of the tips of their skis. So you always get a pullback in the market, or the market pulls back. And these are the ones that get hammered the worst, the ones that everybody was just betting on them doubling or tripling next year. And when that doesn't happen, everything kind of pulls back rather dramatically.
David, thanks a bunch for sharing all those thoughts. I'll leave or I'll part by saying I observe on the NDX that 49.19 high was quickly reversed, and now we're decisively back under the peak of that 2000 level. I think that was 48.15. Yep. And we're actually flirting with being under the 2015 peak, and that was around the 47.40, which is as Tommy O'Brien has long described, a potential failure type pattern. So anyway, we can look forward to an interesting future next couple of months, I would think.
You think? Thanks. We're going to go to Dale in Alabama. How you doing, Dale?
I'm doing good. I'm looking for MYGN, and where should I buy Apple at? There's a few little gaps there.
Well, we're going to run out of time here. Hopefully you can hold through the gap. I wouldn't be buying MYGN at all.
No, my Dynamics, no.
No, this thing's probably going to $10, unfortunately. That would be the first time that you might want to look at it. And what was the other one?
Apple.
We'll talk about both these when we come back. Hopefully you can hold, Dale. Thanks for taking some time with us today. We'll be back after this short time out.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back, hopefully, with Dale in Alabama. Are you there? Dale? You there? Is he gone? Maybe he's gone. I do not hear him. What else do we have going on here? Well, he was asking about Apple. So we'll go to that. I think Myrid Genetics has one more gap down. This thing has got a couple of $10 gaps in this thing. I suspect you get one more gap down to around the $10 range before you want to set that up, and that may be a while, especially if the market starts pulling back. In Apple, the gaps, this double gap down here where almost all these stocks have been coming, would take you to 101 in Apple, and I think that's what you want to hold out for in Apple if you wanted to go long on it. And I would not see, if the market pulls back 101, being any real shakes out here. 2103 on the S&P cash. We're off 9 points. Volume is 2.9 billion shares. So it looks like we're going to track in with the same kind of volume we had yesterday. Maybe just a hair lighter, but not enough to make me think that 2094, which is the low on the S&P cash today, is a low that we will bounce off of. We're probably going to at least get yet another test in that 2090, maybe even 2080 area, and I suspect in the next couple of days. So what else do we have? Apple, we had some other earnings out here tonight that I wanted to look at. What was AIG, Bluebird Bio. Okay, there's at least a couple of them out here. Qualcomm. Let's take a look at a few of those. Qualcomm. Now this is going right back up to perfection, which was this long-term gap. It's pulled. This is Qualcomm. It's pulled off that October 27th high at 71.73. It's pulled back. They're buying some companies. They're doing some other stuff. This one's very murky, but probably still going to do okay. Not on a list that I would short, but not one that I would be long. If this thing would fail out here, though, the downside is fairly strong, and that would take you back to about $57. There is a nice big double gap out on that one, and my guess is that eventually that's going to get tested anyway, so I wouldn't want to be long this thing without doing that. AIG, the big insurance company, also out after the bell. This one is right up here If there was one that was closer to breaking out, it might be IAG. They've done well, no big hurricanes or anything else for lots of people to file claims on. Hard to tell on earnings on this one. I don't see a lot in the chart. Unfortunately, you're either going to break out above the $63 level or you're going to come back down to $55, which is this last one. If I was a betting man, I'd say 70% chance that this thing comes back to 55.50. Maybe 30% chance that it breaks out above the 63 level. So risk reward wouldn't be in there for me. Bluebird Bio, which is one of these jumpy stocks in the IBB, which you've seen this thing come off $197 back on May 29th. So what are we talking about? A year and 2 months ago, this was $197. Again, this is why I am fairly pessimistic that we've seen a short-term low in something like MYGN2 for the previous caller. But you're back in here. Dan, on Bluebird, you really, to get long this thing, would have to see one more test back here around that $35, $36 level. Energy has come off. It's come off great. You've had a big sign of weakness, a sign of weakness on the 14th of October when this thing came down with, well, let's call it 4.2 million shares on the 14th of October. Volume's kind of come low, but you've matched the volume on September 2nd. This is one that could easily get back down to this $35 level. The risk reward is poor in all of these stocks. Got a quick email to check the IBB. Do I still think that 240 is in this thing? And yes, I don't see anything else out here. This was one of the plainer ones. Like I said, the only mistake I made in making all that money on the options was not taking the November version of these instead of the Octobers. Made a lot of money and still feel like I left a lot on the table. Energy on this thing has already exceeded the energy on the way up of the last big leg from 240. So you got energy, energy on the downside. Does it break 240 instantly? Probably not. It's probably going to find some support there. But if you bounce and then come down on any kind of energy, this could crack also with a general market. 2102 on the S&P cash. We're coming into 3 minutes to go. Let's take a look at a few more earnings. First, solar, FSLR. This thing's just so short. It's tough to get a good read on it. I don't think, I mean, if you looked at this thing just off the bat, you would suspect that this is in an ABC on the way down. I don't think anything's going to change. Right now, I'm putting a 80% chance that the Republicans keep both the House and the Senate. That would suggest that there are not going to be any more subsidies on all these companies. In fact, most of the subsidies ended up going to the Democratic Party. So these solar stocks are now a football and a pawn in the war between parties. I don't suspect that anybody in the Republican Party is going to allow the kind of subsidies that we saw circa 2009, 10, 11. These have all pretty much run out, and they would have to be re-upped to make these things even viable as potential business models. We talked yesterday about Tesla's desire to put solar roof tiles on every house and how stupid that was. But it's not that hard a reach out here to look and think that most of these solar companies do not exist in 2 years, short of some kind of massive subsidies, which is the only way these things work. It's still about 4 times more expensive than buying electricity from a coal-producing or a gas-producing plant. When you look at these, the insurance policies from big insurers say that the lifespan on these is still 10 years. That means that they, get hammered off your house in 5 years, they prorate that out. Maybe someone comes out with solar cells that last 30 years, but basically most of these plans end up being a second lien on your house for 20 years or 30 years that the product wipes out and is ineffectual in 10 years. I just don't understand. I know everybody loves it. If you lived in the middle of the desert, maybe these things were useful. They just, in the vast majority of the world in the United States, don't make sense. We'll be back after this short timeout. 2102 on the S&P Cash, 3 billion shares.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I tend to have an opinion just about everything. Somebody asked in the den what my opinion of gold is. And I have to tell you that I haven't been looking at it that closely. I sent a chart to Andy last night that showed maybe strong resistance just a little higher. I can't say that it just doesn't blow through there. I think a lot of other people around TFNN are really focusing on gold. And maybe you want to talk to them just at the moment. I just have been so focused on all the positions I have short that I haven't been spending a lot of time somewhere else. So that's it. I'm just focused on all the positions I have short. Or maybe I'll look at gold tonight and talk about it on tomorrow's show. I just don't, if you don't spend a lot of time looking at stuff, you don't always get the best feel for it. And I've been looking at tech stocks very hard over this earnings seasons, and probably a little bit more in depth on Amazon and Yahoo and Facebook and all these others right now than gold. I do look at gold, just not much lately. Earnings season's very tough for me to look at commodities. There's just so many earnings statements, so many earnings calls. I want to see how they all react after the bell to the initial earnings, and that gives me a much better idea how they're going to perform in the future. So we got a lot of volume out here. We got about 3 minutes before we go into the show. Tom's show here starting closely. We'll see what we have tomorrow. Chesapeake Energy in the morning, GoGo, the Wi-Fi company, Holly Frontier, Intercept Pharmaceuticals, Next Stage Medical. Royal Gold comes out with earnings in the morning. See if there's anything in the chart, RGLD. And you got a kind of a move off here, not a lot of volume. Royal Gold looks to me, you got this big gap down. I've been looking at several. I did look at a couple of these. I sent Andy Heck a chart, I think, yesterday on it. And this one kind of looks like the same thing, which is you have this big volume down day on 1.6 million shares on the 4th of October. Today you got 576,000. If I was long this thing right now, that $74 range would be where I looked and watched the volume to see how this thing reacts at $74. That would be it. If I wasn't long, I've got to wait for the thing to pull back to 64.67. My guess would be leaning, especially going into the elections, that $74 range looks interesting. And with earnings, who knows? These things don't tend to move that much on earnings, though, so, unless there's a big surprise. Maybe Tom will talk about that in his show. But I've seen a couple of these things where the a little bit higher out here isn't that much before resistance comes in. Doesn't mean it won't do it. The other thing, what was I going to look at out here? Murphy's, Qualcomm, Take-Two, Rig, Whole Foods, WFM after the bell tonight. This thing's just been going sideways. This is one I wouldn't be short. Someone might be out here accumulating this thing. Wouldn't be long either. We've had, let's go back a little farther out here. This thing, go even farther out here. This thing has had 3 gaps down, big gaps, one at 60, one at 45, and one at 40 to 40, down to 40 to 35. I would be watching out for this thing. If there was one that might pop after hours big, I would look at Whole Foods. This thing looks like it's going to break one way or the other. It is a 3-gap play to the downside. So I wouldn't be short, but after earnings, if this thing's okay, this thing may have some gaps to fill on the upside. Keep an eye on it. In the meantime, sell when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.